Impact Report, anticipated 50% increase in trade volume across key sectors by Q1 2025. Introduction. On February 4, 2025, a comprehensive analysis revealed an anticipated 50% increase in trade volume across four critical sectors: transportation, telecommunications, energy, and agriculture. This expected surge is poised to reshape the competitive landscape for U.S. investments in these industries, driven by a confluence of market dynamics, regulatory changes, and technological advancements. 1. Context and background. The projected growth in trade volume is set against a backdrop of significant developments within each sector. Transportation. The sector has seen technological advancements such as automation and digital logistics solutions facilitating more efficient operations and broader market access. Telecommunications. The rapid expansion of 5G networks and increased data consumption are driving demand for infrastructure and services, leading to heightened investment opportunities. Energy. The energy transition towards renewable sources is influenced by regulatory frameworks and the need for increased energy efficiency, particularly in response to growing electricity demand from data centers and electrification efforts. Agriculture. Innovations in agri-tech along with supply chain efficiencies are expected to enhance productivity and open new markets for agricultural products. 2. Integration of information from all sources. A multifaceted approach was employed to analyze the evolving market dynamics, drawing insights from various reports and studies. Key findings include: investment trends. The Family Office Deals Study and Amwin's State of the Market Report indicate a marked increase in specialized coverage areas like excess and surplus E&S insurance, reflecting the growing complexity of risk profiles across sectors. Economic influences. Economic inflation is notably impacting claims costs and insurance premiums, particularly in casualty and property insurance, which are vital to the aforementioned sectors. Regulatory landscape. The political climate, especially with the shift in U.S. administration, introduces uncertainty in energy transition policies, influencing investment strategies and operational frameworks. 3. Common key points. Several themes emerged across the analyzed sources. Increased capacity and competition. The influx of new entrants in insurance and investment markets is reshaping coverage availability and pricing structures, as highlighted by the growth in the E&S market. Rising claims costs. Economic inflation and social inflation are driving up claims costs across sectors, creating challenges for insurers and policyholders alike. Regulatory uncertainty. The evolving political landscape is fostering uncertainty, particularly in the energy sector, leading to hesitancy in long-term investments. 4. Timeline of events. A chronological overview of significant events leading to the anticipated increase in trade volume is as follows. 2023, the insurance market begins to experience upward pressure due to rising claims costs and increased regulatory scrutiny. Early 2024, the onset of the hurricane season raises concerns about property and casualty losses impacting renewal rates and coverage terms, particularly in high-risk areas like Florida and California. Mid-2024, trade volume in transportation and telecommunications sectors grows, driven by technological advancements and increasing global demand. Late 2024, as the U.S. prepares for a presidential election, regulatory uncertainty intensifies, particularly around clean energy initiatives, leading to hesitancy in long-term investments. Q1 2025, expectations of a 50% increase in trade volume prompt strategies for navigating the evolving competitive landscape, with a focus on specialized insurance solutions and risk management strategies. 5. Sector-specific insights. Transportation. Technological advancements, innovations in logistics and supply chain management are expected to enhance efficiency and reduce costs. Market dynamics, the entry of new players and increased investment are creating competitive pressures, leading to improved service offerings. Telecommunications. 5G expansion, the rollout of 5G networks is driving demand for infrastructure and services, paving the way for increased trade volume. Data consumption growth. Rising data consumption is prompting investments in network capacity and cybersecurity measures. Energy. Renewable energy transition. Regulatory frameworks supporting clean energy initiatives are expected to drive investments and reshape market dynamics. Demand growth. The increasing energy demands from sectors like data centers are prompting a re-evaluation of energy supply strategies. Agriculture. Agri-tech innovations. Technology is enhancing productivity and supply chain efficiencies, opening new markets for agricultural exports. Global demand. Rising global population and food demands are driving opportunities for trade in agricultural products. 6. Implications for U.S. investments. The anticipated increase in trade volume is likely to have significant implications for U.S. investments. Investment strategies. Investors will need to adapt strategies to navigate increased competition and regulatory challenges, particularly in the energy sector. Insurance pricing. The rising claims costs and evolving risk profiles will necessitate a reconsideration of insurance pricing and coverage options. Risk management. Companies will need to enhance risk management strategies to mitigate the impacts of rising claims costs and regulatory uncertainties. Conclusion. The projected 50% increase in trade volume across transportation, telecommunications, energy, and agriculture by Q1 2025 is indicative of a transformative shift in the competitive landscape. Stakeholders must remain vigilant and adaptive, navigating the complexities of rising claims costs, regulatory uncertainties, and evolving market dynamics to capitalize on the opportunities presented by this anticipated growth. References. 1. Family Office Deals Study. 2. Amwin's State of the Market Report. 3. Utility Dive Insights on Energy Sector Trends. This report provides a comprehensive overview of the anticipated increase in trade volume across critical sectors, highlighting the integration of information sector-specific insights and implications for U.S. investments. The anticipated 50% increase in trade volume across the sectors of transportation, telecommunications, energy, and agriculture by Q1 2025 presents several counterintuitive implications. 1. Increased competition may not lead to lower prices. Typically, one might assume that an influx of new entrants and increased capacity in a market would lead to lower prices for consumers. However, as seen in the insurance and investment markets, increased competition can actually lead to higher premiums. This is especially true in sectors facing rising claims costs due to factors like social inflation and natural disasters. The competition among insurance carriers can lead to aggressive pricing strategies that do not necessarily benefit the end user, as insurers may raise prices to cover potential liabilities. 2. Regulatory uncertainty contradicting growth expectations. The political climate, particularly with changes in U.S. administration, often introduces regulatory uncertainty that can stifle investment and innovation in the affected sectors. While one might expect that a growing trade volume would correlate with a stable regulatory environment, the opposite may be true. For example, the anticipated changes in clean energy policies under a new administration could deter long-term investments despite the growing demand for energy solutions driven by electrification and data center requirements. 3. Technological advancements not always a guarantee for market entry. The expectation that technological advancements will simplify market entry for new players is not universally applicable. In sectors like telecommunications and energy, while technology can lower operational costs, it can also lead to higher complexity and risk profiles, which might deter potential new entrants who are ill-prepared to navigate these complexities. Thus, increased trade volume does not automatically translate into more players in the market. For economic inflation impacting investment decisions, although a projected increase in trade volume might suggest a positive economic outlook, rising claims costs and economic inflation can lead to hesitancy in investment decisions. Stakeholders may be cautious, fearing that increased operational costs will negate the benefits of higher trade volumes. This paradox implies that while trade increases, actual investment in capacity might not keep pace due to economic concerns. 5. Insurance markets reacting differently to increased trade volume. One would expect that increased trade activity would lead to an increase in demand for insurance coverage, thus boosting the insurance market. However, the insurance market is also influenced by loss trends and claims severity. For example, if rising trade volumes lead to more incidents and claims in sectors like transportation and agriculture, insurers may increase premiums or tighten coverage, counteracting the benefits of increased economic activity. 6. Specialized markets could face overcapacity. As new entrants flood specialized markets, there is a risk of overcapacity leading to a situation where supply exceeds demand. This can drive down prices temporarily but may ultimately result in market instability as carriers struggle to maintain profitability. The expectation of a robust trade volume may mask underlying risks associated with overcapacity, leading to potential market corrections. 7. Increased trade volume not equating to job growth. In traditional economic theory, one might expect that increased trade volume would lead to job growth in the affected sectors. However, the reality is more complex. Automation and technological advancements mean that increased trade volume can occur with little to no corresponding increase in employment. Companies may invest in technology to handle increased volumes rather than hire additional staff, thus challenging the assumption that trade growth translates into job creation. 8. Investment in risk management over capacity expansion. Companies might prioritize investment in risk management and insurance solutions over expanding their operational capacity. This shift could be counterintuitive in a booming trade environment where one would expect aggressive expansion. The rising complexity of risks associated with increased trade can lead businesses to adopt a more conservative approach, focusing on safeguarding their existing operations rather than scaling up. These counterintuitive insights demonstrate that the anticipated increase in trade volume is not a straightforward indicator of economic growth or market success. Stakeholders across the transportation, telecommunications, energy, and agriculture sectors must navigate a landscape marked by rising claims costs, regulatory complexities, and evolving risk management strategies as they position themselves for the projected changes by Q1 2025. The report anticipates a significant 50% increase in trade volume across the sectors of transportation, telecommunications, energy, and agriculture by Q1 2025, a development that could reshape the competitive landscape, particularly in relation to U.S. investments. While the report highlights various trends and forecasts, there are several overlooked aspects that warrant further exploration due to their long-term implications. 1. Integration of diverse insights. The report synthesizes information from various sources, emphasizing an integrated approach to understanding market dynamics. For instance, the interplay between the excess and surplus E&S insurance market's growth and the demand for specialized coverage reflects broader economic shifts. This correlation illustrates how increasing complexities and risk profiles necessitate customized solutions, which could have significant implications for investment strategies. Significance. Understanding this integration is crucial for stakeholders as it underscores how interconnected various market components are. This interconnectedness can lead to cascading effects. For example, a shift in risk profiles could increase demand for specific types of insurance, thereby affecting pricing and availability within the E&S market. Investors must remain aware of these dynamics to make informed decisions. 2. Economic inflation and social inflation. The report notes the impact of economic inflation and social inflation on rising claims costs and insurance premiums. While many may focus on the immediate financial implications, the broader socioeconomic effects of these trends could be profound. Social inflation driven by rising jury awards and litigation funding is reshaping the legal landscape, particularly in jurisdictions known for their plaintiff-friendly tendencies. Significance. This trend towards higher claims costs could lead to increased premium rates across various lines of business, affecting businesses' bottom lines. Stakeholders in the insurance market must consider how these pressures could influence their risk management strategies and financial planning. Companies may need to enhance their risk management practices or reconsider their coverage options to mitigate potential financial impacts. 3. Regulatory uncertainty and political climate. The report highlights the regulatory uncertainty stemming from the political climate, especially with the potential shifts in U.S. administration policies regarding energy transition and investment. Such uncertainty can create a challenging environment for long-term investments in key sectors. Significance: the implications of regulatory changes extend beyond immediate investment returns. Companies that can navigate this uncertainty effectively may find opportunities for growth where others see risk. Understanding the regulatory landscape will be vital for stakeholders looking to invest in sectors poised for growth such as renewable energy, where policy support can significantly enhance project viability. 4. Emerging technologies in data utilization. As the report discusses technological advancements in sectors like telecommunications and energy, the importance of leveraging data analytics and innovative technologies emerges as a critical factor. For instance, advancements in AI and data analytics in underwriting processes may lead to more accurate pricing and risk assessment. Significance: investors who recognize the potential of technology to drive efficiencies and reduce costs may gain a competitive edge. Companies that invest in these technologies could see improved operational performance and better risk management capabilities, positioning them favorably in the evolving market landscape. 5. Impact of climate change on risk profiles. The anticipated increase in trade volume in sectors like agriculture and energy will inevitably intersect with climate change challenges. The report touches on the growing electricity demand driven by data centers and electrification but does not fully explore how climate-related risks could impact these sectors. Significance: as climate change continues to pose significant risks, companies that proactively address these challenges through sustainable practices and resilient infrastructure will be better positioned to succeed. Investors should seek out companies with robust environmental strategies and risk management frameworks that can withstand the pressures of climate variability. 6. Long-term strategic shifts in insurance markets. The report details the ongoing changes within the insurance market, particularly the E&S segment, where rising demand for specialized coverage is reshaping pricing and underwriting practices. However, the long-term implications of these shifts are not fully addressed. Significance: a shift towards more specialized insurance products may indicate a broader trend where traditional insurance models are challenged by emerging risks. Companies that adapt quickly to these changes and develop innovative insurance products may gain significant market advantages. Stakeholders should be aware of these trends as they may redefine risk management practices across industries. 7. Supply chain resilience in transportation and agriculture. While the report mentions the transportation sector's growth, it does not delve deeply into the implications of supply chain resilience in the face of this anticipated increase in trade volume. Significance: the interconnectedness of global supply chains means that disruptions in one area can have cascading effects across others. Companies that invest in supply chain resilience through diversification technology and strategic partnerships are likely to mitigate risks and capitalize on growth opportunities in an increasingly competitive landscape. Conclusion: the anticipated 50% increase in trade volume across key sectors presents both challenges and opportunities. Stakeholders must remain vigilant about the intricate interplay of economic, regulatory, and technological factors that will shape the competitive landscape. By recognizing the significance of these overlooked aspects, investors, businesses, and policymakers can better position themselves to navigate the evolving market dynamics. The anticipated 50% increase in trade volume across the sectors of transportation, telecommunications, energy, and agriculture by Q1 2025 is poised to reshape the competitive landscape for U.S. investments in these industries. Here are 4 key points for in-depth analysis and discussion. 1. Integration of information from all sources. The convergence of insights from various sectors highlights the complexity and interdependence of market dynamics. The Family Office Deals study in the State of the Market report from Amwins emphasized that as trade volume increases, so does the complexity of risk profiles, particularly in specialized areas like excess and surplus E&S insurance. This integration of information showcases the need for customized solutions that address the multifaceted challenges posed by growing demand and regulatory changes. In sectors like energy, where rising electricity demand from data centers and electrification efforts is evident, stakeholders must adapt their operational strategies and insurance coverage to mitigate risks effectively. 2. Highlighting common key points. Several themes emerge across the sectors. Increased capacity and competition. The influx of new entrants in the insurance market is transforming coverage availability and pricing structures. The growth of the E&S market reflects a broader trend wherein specialized insurance is increasingly sought after, aligning with the anticipated trade volume surge. Economic factors. Interactions between economic inflation and social inflation are driving up claims costs and insurance premiums. This trend affects various sectors, particularly casualty and property insurance, highlighting the need for stakeholders to navigate these rising costs strategically. Regulatory uncertainty. Political shifts, particularly in the U.S. administration, introduce significant uncertainty regarding energy transition policies, impacting investment decisions and operational strategies. This is particularly critical in the energy sector, where upcoming regulations could shape the investment landscape. 3. Indicating differences between sources. The distinction between various sources of information underscores the necessity for a multifaceted understanding of market dynamics. For instance, while Amwins provides detailed insights into insurance trends and underwriting practices, Utility Dive focuses on broader energy sector trends such as regulatory changes and demand growth. This divergence emphasizes the importance of synthesizing both micro-level insurance dynamics and macro-level economic influences to form a comprehensive view of the evolving landscape. Stakeholders must remain agile, adapting their strategies based on insights from both specialized insurance reports and energy sector outlooks. 4. Complete timeline of events. Understanding the timeline of key events leading up to the projected trade volume increase is crucial. 2023, rising claims costs and regulatory scrutiny began to exert pressure on insurance markets, foreshadowing challenges that would affect various sectors. Early 2024, the onset of the hurricane season heightened concerns regarding property and casualty losses, influencing coverage terms and renewal rates, especially in high-risk areas. Mid-2024, trade volume growth in transportation and telecommunications, propelled by technological advancements, set the stage for increased competition and investment dynamics. Late 2024, as the U.S. approached a presidential election, regulatory uncertainty around clean energy initiatives intensified, impacting long-term investment strategies. Q1 2025, expectations of a 50% trade volume increase necessitate proactive strategies to navigate the competitive landscape, particularly in specialized insurance solutions and risk management strategies. Conclusion. The anticipated surge in trade volume across transportation, telecommunications, energy, and agriculture sectors presents both opportunities and challenges for stakeholders. The interplay of increased capacity, economic factors, regulatory uncertainties, and the need for specialized solutions will shape investment strategies and operational frameworks. As the landscape evolves, a holistic understanding of these dynamics will be essential for navigating the complexities of this transformative period. Adapting to these changes requires not only awareness of market trends but also proactive risk management and strategic decision-making to align with the anticipated growth trajectory. 1. The case of the 2008 financial crisis. The 2008 financial crisis serves as a notable historical case where increased trade volume and investment dynamics significantly reshaped the competitive landscape. The crisis was precipitated by a surge in mortgage-backed securities (MBS) and complex financial instruments that many investors did not fully understand. The subsequent fallout led to a wave of regulatory changes and a re-evaluation of investment strategies across various sectors, particularly in real estate and finance. As institutions faced mounting losses, the competitive landscape shifted, with many firms collapsing while others capitalized on the turmoil to gain market share. 2. The rise of the Internet in the 1990s. The technological revolution of the 1990s, particularly the rise of the Internet, created a dramatic increase in trade volume across telecommunications, e-commerce, and information technology sectors. This rapid expansion led to intense competition as new startups emerged and established companies adapted to the digital marketplace. The dot-com bubble, which eventually burst in 2000, resulted in significant shifts in investment strategies and market dynamics, paralleling the anticipated increase in trade volume in the described sectors. 3. The oil crisis of the 1970s. The oil crises of the 1970s, particularly the 1973 oil embargo, had profound impacts on the global trade volume, especially in energy and transportation sectors. The embargo led to skyrocketing oil prices, which reshaped energy policies and investment strategies worldwide. Countries heavily reliant on oil imports faced economic challenges, while those with oil reserves experienced unprecedented economic booms. This led to a diversification of energy sources and a re-evaluation of energy dependency, mirroring the potential shifts in the competitive landscape anticipated for the energy sector by 2025. The projected 50% increase in trade volume across the sectors of transportation, telecommunications, energy, and agriculture by Q1 2025 is poised to significantly reshape the competitive landscape, particularly concerning U.S. investments in these industries. This increase is driven by a combination of evolving market dynamics, regulatory changes, technological advancements, and shifts in consumer demand. Here's a detailed outlook on how these sectors will evolve and the implications for U.S. investments. 1. Transportation sector. The transportation sector is likely to see a surge in demand as global trade networks expand and e-commerce continues to grow. Key factors influencing this growth include technological advancements, the integration of AI, autonomous vehicles, and advanced logistics solutions will enhance operational efficiency and reduce costs, making transportation more competitive. Infrastructure investments. Increased public and private investments in infrastructure driven by government initiatives will facilitate smoother logistics and connectivity. Sustainability initiatives. As environmental concerns grow, there will be a shift toward greener transportation options such as electric vehicles, EVs, and alternative fuels, driving demand for innovative solutions. Outlook. U.S. investments in transportation, particularly in EV technology and infrastructure, are expected to yield substantial returns as consumers and businesses shift toward sustainable options. 2. Telecommunications sector. The telecommunications industry is at the forefront of digital transformation with significant implications for trade volume. 5G deployment. The rollout of 5G networks will increase connectivity and enable new applications such as IoT and smart cities, driving demand for telecommunications services. Cybersecurity. With rising cyber threats, investments in secure telecommunications infrastructure will be paramount, creating opportunities for companies that provide advanced cybersecurity solutions. Global partnerships. As companies seek to expand their global footprint, international partnerships and collaborations will become essential, enhancing trade volume. Outlook. U.S. investments in cybersecurity and 5G technology are likely to thrive, positioning American firms as leaders in innovative telecommunications solutions. 3. Energy sector. The energy sector is experiencing a significant transition driven by regulatory changes and demand for cleaner energy sources. Renewable energy investments. The shift toward renewable energy sources such as solar and wind is accelerating. This transition is supported by government incentives and rising consumer demand for sustainable energy solutions. Electrification and demand growth. Increased electricity demand from sectors such as data centers and electric vehicles will drive growth, necessitating investments in energy infrastructure and generation capacity. Regulatory changes. The evolving regulatory landscape, particularly concerning carbon emissions, will create both challenges and opportunities for energy companies. Outlook: U.S. investments in renewable energy and electrification technologies are expected to flourish as the global demand for sustainable energy solutions rises. 4. Agriculture sector. The agriculture sector is set to benefit from increased trade volume as food demand rises globally. Technological innovations. Advancements in agricultural technology, including precision farming and biotechnology, will enhance productivity and efficiency, attracting investments. Sustainability practices. There will be a growing emphasis on sustainable farming practices driven by consumer preferences for organic and locally sourced food, affecting trade dynamics. Global supply chains. As trade volume increases, global supply chains for agricultural products will expand, necessitating investments in logistics and distribution networks. Outlook: U.S. investments in agri-tech and sustainable farming practices will likely yield significant returns. Driven by rising global food demand and changing consumer preferences. Implications for U.S. investments. The anticipated increase in trade volume will have several implications for U.S. investments across these sectors. Increased competition. With the growing trade volume, U.S. companies will face heightened competition from international players, necessitating strategic investments in innovation and differentiation. Regulatory compliance. U.S. companies must navigate a complex regulatory environment, particularly in the energy sector, impacting operational strategies and investment decisions. Focus on sustainability. The shift towards sustainability across sectors will influence investment strategies, with a growing emphasis on environmentally friendly practices and technologies. Technological integration. Companies that leverage advanced technologies such as AI and IoT are likely to gain a competitive edge, making tech investments critical for success. Conclusion: the projected 50% increase in trade volume across transportation, telecommunications, energy, and agriculture signifies a transformative period for these sectors. U.S. investments will play a crucial role in shaping the competitive landscape, with opportunities arising from technological advancements, sustainability initiatives, and increased global connectivity. Stakeholders must remain agile and forward-thinking to navigate the evolving market dynamics and capitalize on emerging trends.